In this video, a research report from ARK Invest giving us the latest Bitcoin and crypto data. We'll have a look at some on-chain stuff right here, some of the structural flows that are happening in the market. Then we'll compare that to, what the price is doing, and also some other bits of information that aren't included in the report, but I think are really important for you if you're, looking to invest right now. So I'll leave timestamps for everything down below. Most of the data that ARK Invest is looking at right now, in their opinion, is bullish. You can see it's actually getting better. Now, that's great news, obviously, for Bitcoin as a network. As you can see here, very bullish. I'll go through this a little bit more in detail in a second. Coming to the price of BTC, though, as an investor, if you're investing in Bitcoin, ETH, some other crypto assets, the fundamental assumption is these things have secular growth, right? So they have long-term growth. That's a given. That's observable. So as an investor, what you're looking to do is take advantage of cycles. You either dollar cost average through the whole thing and come back in 15 years, or you try and take a little bit more advantage of cycles when the data is actually really bad in comparison. That's when you're going to get the cheapest prices, given that you assume that assets are secularly growing over a number of years. So we'll look at some of this data. As of the Bitcoin price right now, we're just hanging out at this resistance zone, which, is the ETF hype. 30 to 32K around here is just major resistance. And I can't see us breaking through without a positive bit of news with the ETF hype, but we just don't know when that's going to come. That could come anywhere between the middle of August this year to spring next year, around March next year. There's a huge gap in between that. Right now, the market is pricing in essentially an imminent acceptance of all of these ETFs, which may not come. I still think that we're in an uptrend. It's very clear, as you can see, this green box anywhere down to 25, 26 would still be in that uptrend. And that's very viable if we get a delay or something with the ETFs over the next 6 weeks or something like that. But price to perfection short term is never great. So short term, it's just kind of a little bit fluffy in terms of the price. But longer term, we're still way towards the bottom end of ever being overheated. So we'll go through some of that data right now. If you are a trader, check out the deposit bonus to Bybit, up to 30K there, and BitGet. Check them in the description. Links down there. Make a deposit and get the deposit and trading bonus. Coming to some fundamentals of the Bitcoin network first, it's really just business as usual for BTC, to be honest, after what was a very long bear market that we had. Mining difficulty is up 71% over the last year. More people are trying to mine this asset, pretty much at an all-time high with that. Active owners are up 11% over the last year, and then transaction volumes are actually down 36%. We might see this not the case within 6 months. So you can see that the 1 month change is up 30%. So, it just shows that people are coming back into Bitcoin. There's some other data here that's showing that institutions are starting to flow back in as well. So that's obviously good news generally for the market. Now, as you can see, the cost basis of BTC is around 20K. So if your cost basis is anywhere near that, then you're doing very well. You're getting a better price in the market. And the short-term holder cost basis is actually more important for short-term prices. During consolidations and uptrends, in fact, for most of Bitcoin's history, it actually trades above the short-term holder cost basis. And so looking at the price of BTC, not just from technicals, but also from an on-chain perspective, around 27 around here might be an area where it finds support if we just get, kind of some weakness through the ETF news. So that's usually been a area where the price actually bounces from at the moment around 27K. Interestingly as well, if you actually started dollar cost averaging into Bitcoin at the very top of the last bull market, so you started buying at 69,000 and then just bought the same amount each week throughout the entire bear market, you'd be up around 15% on your investment right now. It's obviously going to change day to day, but it's amazing that you can start investing at the worst price possible to actually buy, which is the highest price, and still be up 15% in your investment. So it just shows that Bitcoin is in demand as an asset. Now you can see this as well. The green is the 200-week moving average, and then you have the purple, which is the short-term holder realized price. As I said, for most of Bitcoin's history, during bull markets or consolidations, it actually seems to rise above off the short-term holder cost basis right here. So bull market right here. And then in the bear market, it comes below this, typically a better time to buy, but we're still relatively low, right? So we're not crazy high in terms of the price, but Bitcoin is starting to see some strength again come back into it. So the 200-week moving average and the short-term holder realized price starting to act as support rather than resistance right now. And that shows us that we've potentially flipped from one market into another. So the bear market seems to be behind us, maybe moving into that consolidation, potentially moving into a bull. Now, we've got a halving next year. So this is absolutely normal price action for Bitcoin before a halving. As we get closer to it, you would expect more flows into BTC, just like every other halving. ARK Investor also focusing on GBTC, which is a Bitcoin trust. The important thing here is the narrative around ETFs. So GBTC itself, this thing trades at a discount. So they're one of the biggest holders of Bitcoin, and they trade at a discount. So you can actually buy Bitcoin at a massive discount to what it actually costs, but you're tied up in this leech of a product that's taking about 2% fees, and you actually can't get out. It's a terrible product for investors. And so this thing has to be turned into an ETF at some point. But the question is when. So maybe the SEC lose their case against Grayscale. We really don't know that. Maybe the SEC are actually trying to save face here. If they lose in court, then they can also issue the ETFs for other companies as well. It seems very political. I think most of this is noise. What we just need to know is these ETFs are probably going to be accepted at some point now, because you have BlackRock, you have Van Eck, you have Invesco, you have Fidelity. These are the top ETF providers in the whole world. And it's not that they apply to the regulator, it's that they work with the regulator to make sure that things happen in the way that the regulator wants. And so these aren't random applications. These are probably people that are working together with the regulator to say, hey, SEC, what do you actually want out of a Bitcoin ETF? The SEC told them what to do or what they would want to see. And so those institutions are helping that happen. And so at this point with these firms, and Larry Fink, on Fox News saying Bitcoin is a worldwide asset and we want to make it more accessible, it just feels like it's that time. Now, the timelines on this are important if you're trading. So as we can see, there is actually a date here for the 21 shares and ARK Invest ETF right here, which is the 13th of August 2023. Now, they have recently amended their application to bring it in line with BlackRock's. Essentially, all of these guys now have what's called a surveillance sharing agreement, which is basically a price monitoring agreement with Coinbase. Now, is that enough? Well, I guess these companies think so. Coinbase is being sued by the SEC right now for being an unregistered securities exchange, which is one of the worst things you can do under any SEC rules. Just seems a little bit strange that they're all now working with Coinbase, and that's going to be the thing that unlocks these ETFs. It's all very, very strange, but for some reason they are applying, and you have to take that seriously because these guys are not going to apply randomly. And so BlackRock, you can see here, the next deadline date is actually the 2nd of September. However, these dates can be delayed, they can be pushed back, they can be asked more questions. And so you're looking at final deadline dates around the end of 2023 and the beginning of 2024. You can see around March time for the Bitcoin Trust from BlackRock. So any time between now and then, we might get a decision. 13th of August is probably the next deadline date that you want to look for. Is one going to be accepted? Are they all going to be accepted? I just don't know, but we need to look more at the news flow on that to see what's happening. But in terms of the Bitcoin price, it is going to massively trade around these events. And so technicals are somewhat irrelevant, because if ETF gets accepted, things definitely going to get bid up, probably way more than it is now. And if there's any news about delays or anything like that, then you'll probably see, a little bit of, shorts coming into the market and people trying to spread fear again. Another key metric we can use to understand cycles is the amount of Bitcoin supply that hasn't been moved for 1 year or more. So what you can see by my scribbles here is we can actually look at how this affects Bitcoin cycles and prices as well. So during bear markets, more Bitcoin is not moved. So during a bear market, no one really has anything to do with their Bitcoin. They don't want to sell it for anything. And so they just take custody of it, put it in a wallet and leave it there. And so during bear markets, the amount of Bitcoin that is not being moved increases, as you can see here. So that happened in the bear markets. So nothing to do with your Bitcoin. Maybe you're sitting on it. Maybe it's in a small loss. You don't want to sell it. You're just sitting on it. So you're not moving it. However, in bull markets or towards the peak of bull markets, you can see that the amount of Bitcoin that is not being moved falls. So this means that more Bitcoin is being moved. Essentially, this is a supply and demand story where if there is no supply of something, then you have to bid the price up in order to get that supply. So these people during the top of bull markets have actually been incentivized to sell through higher prices. And so what we can see through this cycle is that the amount of Bitcoin that hasn't been moved is very high yet again. And so that's showing us that the price is probably not there yet to incentivize them to sell. Where are we in the cycle? We're probably towards the low end of it, just from other cycles. Now, what we can also see is actually over the long term, this trend seems to be moving upwards as well. Maybe that's just better options for keeping your Bitcoin in cold storage, hardware wallet options, which are a bit better. Or maybe this is just institutions or just a lot of people taking custody of their Bitcoin. Who is actually buying right now, we can see as well. This is from Glassnode. So this is the monthly absorption rates. And again, a supply and demand story. So what we can see here is that shrimps, crabs, and fish are all accumulating right now. Shrimps are under 1 BTC, crabs are 1 to 10, fish are 10 to 100. So 10 to 100 for the most part is probably either large investors, maybe family offices, or smaller institutions, 10 to 100 BTC. So most people under 1 BTC, just normal retail investors, just dollar cost averaging, some into Bitcoin. So what we're seeing here is all of these are adding. However, shrimps and crabs are adding the most. So what we can also see is that 230% of the monthly mine supply is being absorbed by this buying. So all of the mine supply is going. And so again, it's just simple supply and demand in an asset. And so you have a supply and you have 230% of that supply being absorbed, which means the other amount of buying pressure has to come from sellers that already have BTC. And maybe they don't want to sell at this price. Maybe that's too low for them, which is why the current price is now above the short-term realized price. Because if you have 230% demand, 230% more demand than supply, then you have to buy that supply from existing holders who are not going to sell at a loss, considering that demand story. So that's just a supply and demand story for Bitcoin. There is still mega demand for BTC, as we can see here. Now, interestingly as well, shrimp and crabs seem to be flowing pretty much higher. Definitely shrimp as well. That's potentially a little bit bearish if you're trading ultra short term, because shrimps and retail tend to buy at higher prices, and they tend to carry on price movements a little bit too far. So as we can see that the down in the 2021 bull market, you had a lot of shrimp buying when fish were actually selling. And so fish, looking at maybe more institutional investors or people who have been around a bit longer and bought at lower prices, happy to kind of let go there. Whereas shrimp, were buying a lot, and shrimp, retail investors tend to come in a little bit later and pay a little bit more in cycles. That's just how it works. And so they're doing that again here a lot. So potentially short term, they might be just a little bit late into the move because we're already up 100% this year. But again, that's maybe for short term. The long term story is that you can just see here that there is pretty much constant demand for BTC, and they are adding over time, right? So again, supply and demand story. You have a asset with a fixed supply and demand that is very positive. And so really over time, there is only one way that the price can go if that continues. I've also picked out 2 slides from the report which show macro conditions right now. These aren't all of the slides in the report, so I'll try and link it below if you want to see the full report. These are, in my opinion, the most important though. The first is you can see that currently this is the hardest and fastest rate tightening or rate hiking cycle ever in history. Now, rate hiking cycles usually are followed by recessions and higher unemployment. It's almost certain, in fact, absolutely certain that is going to happen, because that's exactly what the Fed is aiming to do. So with high rates and tighter monetary policy, their specific aim is to loosen up the economy by making people unemployed. And they are going to do that. They can keep rates here for as long as they want in order to rise unemployment. That's what they're going to do. That's their plan, and that will happen. The extent to which that will happen, the extent to which they're going to have to then cut rates later because of a very sluggish economy is kind of unknown, but also kind of unimportant. These are short-term cycles. You have to differentiate short-term cycles from what's fundamentally happening. So short-term cycle is, it looks like we may get another 1 or 2 rate hikes. Maybe that's just bluster from the Fed. In any case, they're going to raise rates at a high enough level in order to make people unemployed. Once those people are unemployed, then we can start talking about cutting rates, but it's not going to happen until the employment figures show that. And so that's just the way it's going to go. That's an economic cycle. However, looking forward, we're towards the end of this, which means that the unemployment is the next thing to go. And once that does happen, you'll see central banks starting to change their rhetoric. The second thing is, this is the long-term secular trend, which is why the only safe haven in markets, in my opinion, is growth. So this is the debt, the public outstanding debt in the States, and it's a similar picture in other Western countries. Since the agreement, the federal government has issued $850 billion in debt, which the mainstream media largely have overlooked. Debt issuance helps fund continued deficit spending. Government spending positively impacts GDP. This amount of fiscal deficit is actually super stimulative because you have a fundamental difference between the amount of tax income that you have and the amount you're spending. You're just spending way too much money. You're spending money that literally doesn't exist. And the only way to do that is to continually issue more debt. And you have more debt upon more debt upon more debt. The more debt that you issue, the higher the interest payments, the more you need to actually spend, and the bigger the deficit gets. This is structurally broken, and it's why the only safe thing to invest in is things that are growing faster than this. This right now, this currency debasement and debt spiral is around 7% a year, I think, if you add it all together. So you need something that is growing faster than that just to stay afloat from the currency debasement and the rising prices. We actually may continue to see prices rise simply because of currency debasement. As the currency debases, everything else that's valued in that currency rises in price. Just ask Zimbabwe and Argentina. Even though their interest rates are really high, right? Argentina interest rates are crazy, but the inflation persists because of the debasement and the debt spiral. Well, that's essentially what's happening with the States as well, the US dollar and most other currencies to different levels. And so you have to invest in something that's growing faster than that. Now, that could be a house is going to grow at the same level as that. The S&P grows around the same level as that. The NASDAQ grows a little bit quicker than that, which is why so many people are piling into that, and also big tech. And of course, Bitcoin and ETH have growth rates as well, which I'll show you. As for Bitcoin, the current growth rate is around 28 to 30% a year. So we can see this. This is a CAGR, a 4-year CAGR. So if you hold for 4 years, compound annual growth rate over that time is around, you can see that just above my head here, is around 28% right now. Now, this is going to change depending on the price, of course. But as you can see, as Bitcoin is maturing as an asset, the compound annual growth rate is going down. Absolutely normal for an asset that gets larger over time. The percent it can grow in each year is obviously, can't keep going up. So as we can see previously, you had 150% growth rate, went down to 100. And then we can see down in this part of the market, we're looking at around about, 30 to 40, even 50%, depends on the price. So that is growing faster than the rate of debasement around the world. And so in my opinion, something to look at. As we can see for Ethereum as well, Ethereum has a much higher percentage compound annual growth rate than Bitcoin right now. You're looking around 60% as of right now. It's been as high as kind of 80, 90% in this part of the cycle, down to 60% here. So again, a faster growth than BTC, but it's also it's a lot smaller. It's half the size of Bitcoin. So as Ethereum matures, its CAGR is also going to reduce. However, both of these are huge growth rates right now. So as a long-term investor, if you're looking at these, you're thinking they have some of the best growth rates of any investment in the space. And, they're just coming out of their bear market as well. So you have to protect your money from that debasement that we're seeing. And it has to be about 10% a year or more. And if it's not, you're just kind of keeping up rather than actually growing your wealth, which Bitcoin and ETH, they have very, very high growth rates, which will come down over time, but they're still, extremely attractive. Looking at growth rates is great, but what's way more important is just having security within that investment, right? So, you can look at an altcoin that has a CAGR of like 15 million% within the last year, but it's not going to be around forever. And so the really important thing is security. I think these ETFs pretty much prove that at this point, that these assets are going to be around and they're actually useful and there's demand for them. That's pretty much about as confident as you can get in that these assets aren't going away, or at least Bitcoin is, being adopted by institutions, and that's just going to grow the use case over many years. And I assume from Bitcoin will come, other ETFs and other adoption as well. And so that adoption is really important as well, not just the growth rate, but knowing that when you actually want to take your money out, in 10, 15, 20 years, the actual asset's going to be there for you to, keep taking that money out. So that's the most important thing. So for right now, I think we're just trading off this ETF news, but the fundamental story is just looking as strong as ever, in my opinion. If you are a trader, check out the deposit bonus on Bybit, also BitGet down there as well. Crypto Investor Course has 300 plus videos. Check the link down there. You can come into the private Discord groups and talk about all of this with me as well. I'm James, as Money's EG. Cheers for watching, and I'll see you in the next one.